when I plan, things go wrong. So I just, you know what I mean? Like I got bullet points and some little. That's about the extent of it.
Yeah.
All right.
Sandy's gonna have to let me know how to use a capture card. I could not figure out how to get the Blackmagic capture card for the actual camera to connect to this browser.
Sandy has all that stuff. Oh,
yeah,
look how magnificent Sandy's quality is.
I've got two lights right on either side of my screen. I bought 2 small light boxes.
Oh, fantastic!
Yeah,
I got this ring light. You can see it in my glasses.
I have nothing. I live in Mexico, guys. You know what I mean?
I have 2 browser windows open with a color palette checker, and I was like, I think I'll just generate some orange palettes and see what happens. I did.
I got my desk light right. I was like, look, baby, I got one of them vlogging lights too, and I turned it on.
I can
it's like
turn my
everyone bought the same ring light too. It's like everyone bought the same one, and we all left bad reviews, but somehow it's got 5 stars.
I don't believe in reviews. Why I used to check reviews? The bad review stuff has good quality, and then the good review stuff has. I just don't believe it anymore. Yeah. So as far as it goes, though, man, I mean, I have some money in Emacs. I got some stakes in Emacs. Very little, you know what I mean, but still something. That and shit, pretty much all I got in. But I know that we've me and Broski talked about in the past. How he had mentioned just when we first started doing the podcast that you were a possible, guest, and I was like, don't know anything about it. Sounds awesome. I'd love to have anybody who's part of anything in the crypto game, because that's what I do. I'm the one that's in the crypto servers. I know that we all mess with crypto, but technically, I guess it's the one that I'm running as a crypto one, right? But as soon as I heard about that, I started doing some research and stuff like that. And like you said, there's very little as far as that I could find on you in general as far as the Emacs thing went. But I guess that's all going to change anyway. But yeah, why don't you want to tell everybody who you are, what's going on, and anything you want to bring up as far as that goes?
Sure. So, hey, everyone. I'm JoshJames, or not JoshJames. For a collection of reasons, I left the internet in like 2013, right? So I lurked, but I deleted a bunch of my pretty much everything. All the accounts, everything, ghosted everything. This is just in the wake of all of the Snowden revelations. I had been jailbreaking iPhones since like 2008, 2009. So as soon as you're into any of those, by no means, I would never prescribe myself as a hacker. At closest, a script kiddie, right? Just meaning I go and I know how to Google things a little bit more than somebody else does. And then I just mess around and figure it out, right? Yep. But it turns out that, if you do that enough, people will come to you and be like, hey, how do I break into the NSA or something? I'm like, well, I can Google it for you. But anyway, so I got a little concerned with the landscape of the future in social, particularly I'm 26 now. So that was at, age 18, 19. And I just realized that, I didn't really control the information that was presented to me, right? Because it's all algorithmically determined, and it would just show up and it would influence how I was thinking about the day, right? So I'd wake up, and then sometimes, I would go several hours in a day where I would not have my own thoughts. There wouldn't be a 5-minute period where I wouldn't attempt to fill it with an algorithm, right? With a news feed. And this is now 8 years ago, right? So anyway, having left the internet for a while, I also was into Bitcoin and crypto back in I think 2011, 2012 was about my first years. Nice. So I saw it hit $10. I saw it hit $100. I think that was August of 13, if I remember correctly. Earlier this year, I went to go dig through some old hard drives and look through the types of photos and screenshots and everything I had on my phone right before I got off the internet. And I found screenshots, where I just took a picture of my laptop screen, and those were old Bitcoin wallets that at the time had $15 or $20, and now it's 10, 15, 20K.
Wow,
right?
Man.
So, crypto and I have had a pretty turbulent relationship, as I think many people can relate to. But over that past 7-8 years living nomad, I did a bunch of off and on consulting. I did some app development here and there, just kind of feeling things out. And I've been working on a bunch of projects in the background. And so I met all of the Emacs guys because I'm down here in Miami. You can see the wheel.
Calle Ocho, right?
Yeah. So I'm right across from Bayside. A couple of weeks ago, they had given me a shout reached out through a mutual friend. It was like, hey, we're working on this crypto project. Lot of confusion. Like, we're trying to do these certain things, but we don't know if these are the things we should be doing. Can you come help us out? It's like, okay, sure. Right. So I get on a call, ends up going a couple hours. They bring on a couple people. So I'm asking a bunch of questions. They're asking a bunch of questions. Everyone is giving each other undivided attention, right? Which is always a good sign. So that's enough to take it to the next day, where I go to the Fontainebleau, where the Bitcoin conference was being held on the beach. And apparently I found this out after the fact. They were pretty explicit about it being like Bitcoin and not other crypto, which,
It's a little
whatever.
weird. That's a little weird.
Whatever. So, I showed up there. I ended up speaking with, 20-something, 24 plus people over the course. It was like a marathon session, so we're like meeting there in the one of the atriums of this hotel. And there, it might be like 3 or 4 people, and then another 3 or 4 show up. And now we've got like an 8-9 person group, and we're just trying to brainstorm and try to mind meld, and then a few of them will rotate out to go take care of some pressing issues, or, figure out who's giving a shirt to whom, and so then a few other people show up. So like after 5 something hours, we struck a deal, and I had a pretty good understanding of what would lie ahead in the next few weeks.
And this is all pertaining still to Emacs, though, or just?
That's correct. Yeah.
Okay.
So that's a seamless transition from my backstory into my relationship with
right. No, and
it
was well done.
Gotcha.
Well done. I applaud you for that. Yeah, I like that. All right, cool. I mean, I heard about Emacs, obviously, from these guys. Like most traders, right? I don't really trade. I just steal all their ideas and then try to apply it myself. Broski and Sandy is how I operate, right? My trading technique is I spin my phone around and I point at something, and if it lands on that, I go long. But so I have very little information about stuff, right? I do read the news and stuff, but for everybody who doesn't know, Emacs is Ethereum Max, right? I mean, does it have any relation to Ethereum, or is it just because it's on the Ethereum blockchain?
Well, that's right. Yeah, it's an ERC20, which means it's just compatible and compliant with the regulation or the standard of like an Ethereum-based crypto. Yeah.
All right. Okay. All right. So me on myself, as far as again, what goes with crypto, right? I want to know what's in the works as far as is just not just with Emacs, but the stock market. How do you see the stock market? How it's been, especially in the last week or two, how things have been shaping. What do you see in the future? I mean,
the whole crypto market, right?
Yeah. Because the crypto's just been going wild as far as I'm concerned, right? Lately. So a lot of highs, a lot of O's, up and downs, going crazy. And just what's your outlook on that? And where do you see coming in the near future or distant future, however you want to?
Yeah. So looking at crypto right now as a landscape, right? Most recently, so like yesterday, we had something like $1.5 billion in open call interest expire out of the money on Ethereum in particular. And I don't spend most of my time looking at charts, so I typically am just picking up headlines. But this one, was brought to me about a week or so prior, and it was worth investigating. So I spent a little bit of time to dig into it. There's a deleted Michael Burry tweet, who was like my lead on GameStop. And I think a lot of people, understand that he might have some controversial and early opinions, but they generally tend to be accurate. If you predict the entire collapse of the housing market because you poured through all of the most raw and granular data to come to these conclusions, and then championed that, those conclusions for a couple years, and then finally you're right and they make a movie about you. But nonetheless, so Michael Burry has some tweets about how much institutional leverage there is in crypto, and these call options and other crypto-based derivatives are a good. It's a good signal to look at, right? Because you want to understand how larger financial constructs and traditional markets have much more of an effect on the volatility of crypto. And volatility works both ways, So when you see some crazy 300-400% gain in the course of a 6 to 8 week period, that's not coming from nowhere, right?
Yeah,
that's the same volatility that we experience on a downswing. And so what I've learned from being an accidental diamond hands holder by having these old Bitcoin wallets is that when you take a macroeconomic approach, and you put your assets in a place where you can't take an action against them for a certain range of time, you're typically rewarded in any new type of asset class, right? And I think crypto is no different. Specifically zooming in to other things that we could speculate on as a result of all of these options expiring out of the money. I think I had read the maximum pain point was like $1,920. I'm assuming at 4 p.m. yesterday, being Friday Eastern time, right? And so then you see kind of the repercussions as there's a bunch of positions that are either forced to be liquidated or liquidated in order to cover and offset some of that leverage that they had been trying to get long exposure on by buying these call options, right? Nonetheless, I don't think a 300% swing in either direction is ever something to not expect in crypto at this time, right? And much broader, not just with crypto as the landscape, but now talking about the entire state of global economics and in particular, the US. We are absolutely heading towards an irreversible hyperinflation period.
Agreed. Yep.
And if BlackRock can go and buy as many single family dwellings at 20% above market rate and aggregate them, and then now what are you going to do? You can't buy a home. How is that social betterment, right? How is that progress? How is there any trickle down effects there? So I think that because of this scenario that we find ourselves in economically, I'm not sure whether it happens in 3 months, in 6 months, in 18 months, but I'm pretty sure it happens next year. I think there is a major economic correction incoming. Okay. Now, whether that correction will result in positive social change, I think remains to be seen. And, if we can do anything about it, it will, right? Because I did GameStop. Like I was just a couple days early. I did it Wednesday, the 27th. So I bought some weeklies for the memes and, bought some shares at 39. And so then those expired plus 22,000%, right? God. And so then I spent the next several months leading till now just trying to dig deeper and uncover all of the layers of how is this even able to happen? And like you, I didn't find this information myself. I didn't go out of my way to dig through the raw FINRA reports. I just happened to see for the third time in a row, GameStop came up on my Reddit feed for Wall Street Bets. And then when I had clicked that, it was a paragraph talking and it cited Michael Burry. So I was like, oh, I remember that name. I watched The Big Short. Right. That girl in the bathtub, you can't forget that, right? So then I was like, okay, let me go and see actually what he said and not just read, this guy's interpretation of that information. And, so stepping stones that then led me to putting another hour when it was really only 30 seconds to read that post, 5 minutes to dig a little deeper. Right. And so ever since then, I've been trying to reconcile how any of that could have unfolded and what can we expect for the future. And meanwhile, there has just been an incredible onslaught of just the most blatant misinformation. And so much of it originates from people that are actually well-intentioned. And I don't know. So I'm circling a bunch of different concepts here, but I expect a major correction is coming. And I think that could be a positive thing. Because if you look at all of the spread of companies that make our lives the way they are now, many of them were launched straight out of 2007, right? Straight out of the recession and the financial crisis. Lyft, Dropbox, Stripe, Airbnb, Twitter, like the list goes on, right? Reddit, probably more. Many of them all sat in some of the same rooms at Y Combinator, and they were all just dudes, just people trying to create an idea, right? And each of
when
those
people deal with stuff like that, ideas are bound to happen. I mean, when scenarios like that. So yeah, I get. Yeah,
certainly.
Go ahead.
Yeah. So we have the opportunity to do that with crypto and to do that with DeFi and to do it with almost like the decentralized financial model is in theory applicable to any business that transacts, right?
See, I agree with that. I agree with that 100% actually.
Yeah.
We're having some issues, I guess, with some of these guys. I'm sorry to cut you off real quick, but yeah, I mean, so let's just keep going. I mean, the way Bros can jump in when you want to, but if you, and Sandy as well. I just know that people are probably like, what the hell's going on? I don't know. I've never used this service before, so just run with it, people. Just run with it.
Yeah. Do you think a transfer of wealth is coming?
I hope so.
Do you think so? Based on the data that we have and the whole world probably changing in the next decade.
So if you think about a lot of the things that have evolved, right? They have evolved to form asymmetric power structures, right? So when you apply vertical and horizontal scalability to an asymmetric power structure, and what I mean by this is like, hey, if you go and you register for a platform, right? You go and you sign up for Instagram. They own everything you ever do irrevocably, and they have abstracted it away to where it's one tap, right? So that is basically an irreversible decision, all things considered, right? From a practical perspective, you never get that data back. You can never really say no ever again, right? And so then, because this can scale so rapidly, and everything's caught in network effects, it's really difficult to then find ways of reversing those trends, right? I mean, because capitalism is not a bad thing, but what happens is these natural scenarios and mechanics, they evolve over time to just meet that asymmetry, right? And so if I'm a software engineer and I go and I write some code, and that code can be executed hundreds of millions of times without me doing anything, and I find a way that code needs to be used somewhere, I license it for whatever number I feel like, and it becomes its own game of equilibrium in that negotiation. It is not relative to the time or the effort or the energy that I put in, right? Because if you go and you study each of these huge companies as they were growing, a lot of what they did early on was in no regards, in no capacity was it really even novel. It was just a little bit better. And if you look at like Shopify versus WordPress, right? Or you look at what was another one of these examples? Like any time you just make something a couple clicks sooner, right? I think Grubhub preceded Uber Eats, right? But then Uber Eats, you've already signed in because it's the same Uber account, right? The same gift card works both ways, right? Robinhood is I think I opened up a TD Ameritrade account once and it took maybe 15 minutes, but Robinhood makes it 30 seconds and one button, right? And they never even block you from getting to the next screen. Even if you don't check a box that you're supposed to, they'll just let you keep going and then they'll remind you about that box later, right? That always kind of forward UI. And so I think in the context of, trying to track backwards to your question, in the context of a wealth transfer, there must be projects, platforms, and people that build things that are much more symmetrical. They're symmetrical in their incentives and in their reward structure, and they're somewhat symmetrical in horizontal authority and fractal authority to make decisions and changes.
So for an example like Cardano, do you think that could change the game as they say it will?
So I am loosely familiar with Cardano. I think that they say all the right words, and I haven't dug into I suppose the math and the details to really give, like, I should not have an opinion about it other than it seems good, but that's all I know, right? Yeah. Because I have long learned, don't speculate on things that you know for certain you don't know about.
Yeah, see, I agree with that, because people tend to do that. People love hearing themselves talk sometimes to the point to where they don't know some shit, they're going to say it anyway because, hey, I'm talking, people are listening, I'm going to say whatever I got to say. So I like that. I appreciate that, actually, because I know the name Cardano. I know it's ADA. I know they got some new stuff coming, but that's about where information draws, man.
I do a lot of research on Cardano and Ethereum, just, Ethereum versus Cardano. Ethereum is mostly, mainstream. Cardano, they want to hook up people who don't have ways of paying each other, like in other countries, to the globe. They want them be able to make transactions as easy as we make transactions. So Cardano is for the developing world. Yeah, and cut the cost.
Yeah, I read it was like cut the cost by like 70% or something like that.
85%.
Yeah, that's high.
Said.
And the only thing I know too is I found that one thing we were looking at was the ADAX we had talked about, which is
the new one coming out, ICO.
Yeah, and they're supposed to go based off of the Cardano technology. So that's I don't know. You were gonna say something, Sandy? Go ahead, man. I see you over there itching, bro.
If someone can make it easier to buy and sell crypto, especially these new coins, it's going to be a blast. I'll tell you that right now, because just like everyone else, you hit that button, you cringe until you get that notification saying transfer complete. Yeah,
well, I send myself Bitcoin on Cash App for those 17 minutes I'm waiting. I'm freaking the hell out. You know what I mean?
Some of these guys are spending $20-$30, but they're trying to find $70 to $100 just in gas, and then when the transfer fails, you've wasted all that gas and you still got that $20 sitting in there. We're thinking, well, I'm done. I gotta wait till I can get that money back to get this gas back. If someone can make that cheaper, I think they're onto a huge hit there.
Yeah, definitely, man. I agree with that. I've yet to spend a lot of gas fees on anything. SHIB was a little crazy. Yeah, but I just did a workaround and bought it through Binance, so I didn't even spend any gas. That's how I work around things.
I got in a bit too early. I paid some gas fees on that one. I lost gas fees on that one as well. So
definitely, man. I have another question too. I know that whenever you get somebody that's related to any kind of a project, right? Everyone wants to make everything about just that project, which is, I guess, understandable. But I mean, I wanted the people to know who you are in general first and stuff like that as well. But what's up with Emacs? Can you tell us just in general everything you can about Emacs in the littlest? And I'm not telling you to cut it short because we have all the time in the world, but I'm saying, like, can you condense it for people that aren't, I don't know, mentally as capable, or people of my mental, gracefulness, let's say.
What you're struggling to find is the term compression. Can I compress several weeks of like huge signal into a soundbite? And I will attempt to.
He said layman's terms. Layman's terms.
Layman. First, I don't even know what layman means. It's a big word. Can we use 5? No, I'm kidding. Go ahead, man.
Who is the layman? Like, which one of us is that? So Emacs is an emerging microcap cryptocurrency. Microcap with an AP, right? So I think, there's a lot of loose definitions of what is a microcap. It just means it's small and it's new, right? So they kind of came out of nowhere by sponsoring the Floyd Mayweather fight. I think that was at the Hard Rock Stadium. It was somewhere around here. I didn't end up going, right? I was behind the computer, right? Yeah, so anyway, that happened the Sunday of that. So like the last day of the Bitcoin conference, which caused, again, some controversy because, he was supposed to be like everyone was supposed to be talking about only Bitcoin, right? Okay, whatever. So over the last few weeks, there has just been an enormous amount of support and outpouring of community. And that's been incredible to experience and to witness. Meanwhile, we have a really deep leadership team that is like, it has a lot of overlap, right? So there are a lot of different domain experts. And you can just tell because I think it was like a week after the Sunday after the fight, we had like Kim K retweet us and a bunch of other press, right? Which itself caused a bunch of controversy because what happens when you put a bunch of really talented, like capable and passionate people together and you shake everything and you say, let's go, right? Is that some things, can occasionally get overlooked. And that shaking had been happening for a few weeks leading up to the fight. So there were just so many people, all well-intentioned, all trying to make the best decisions according to their judgment. And it just needed more cohesion. The last few weeks have represented an enormous effort to really start to contain and channel all of that passion and that energy into the venues and into the work that's going to matter most for each person's skill set, right? So in that paradigm, it's important for me to note, right, that I'm kind of taking a step back from the community, so to speak, and it's not because I don't love everybody. It's because a lot of the things that I've been saying may conflict with like the official team stance on things, right? Yeah. And so I have this idea, I suppose, or this concept, and I think that the future of a lot of businesses is going to be radically transparent, right? I think just the nature of these paradigms we're going to see out of DeFi requires projects and companies to just bar all, right? Or bear all, whatever that expression is. So for me, that means, as soon as I jumped onto this project, I also was coming out of the shadows from the last 7 or 8 years of like mostly lurking and not really going out of my way to make myself known or to connect on social platforms. It's just kind of absorbing for extended years, right? And I did this very intentionally because I thought, here is an opportunity where we have just so many incredible, diverse collections and teams that, they got all this energy and they just need a way of figuring out how it fits in, right? And I view the landscape of the future to be nothing but those types of puzzles and those types of challenges. So I'm privileged to have been a part of it this entire time. And now it's important for me who, anytime I make a mistake, like I'm the guy that like, let's do it live. If I mess something up, like I messed it up. And I gotta get okay with that, right? I obviously I play music, so I like improv far more than I do rehearsal. I think a lot of people feel that way. Yeah. And so that just means in the context of a very new and evolving team where there's just a lot of really complex and precarious decisions that need to be made quickly, right? You got the biggest recipe for a lot of heat and a lot of emotion. And so in the middle of all of that, then anytime I go public and just talk about what I'm thinking and feeling in this radical transparency kind of way, it's caused a lot of friction in the team, and it's kind of my fault, right? So it's time for me to say, look, now I can come on podcasts and I can have these discussions about all these macroeconomic things, and I can rant and ramble about how everything is doomed, but we can make it better. And I need to be able to do that in a way that doesn't prevent the great people at Emacs from doing their jobs, instead of having to clean up after me coming on there and stirring the pot. Makes sense? Gotcha. So that kind of fast forwards us to where we are with Emacs. And I think they're having the fight is tonight. You can go to ethereummax.org. There's the plug.
Yeah, man. Like with me, my wife always says that I could never be famous because I would be the worst famous person in the world because I'd probably get arrested all the time, and who knows? You know what I mean? Like, so like it just, I understand that so much. Like that resonates with me so much because like that's how me. If I was part of something, like right now, I have another podcast that I do, right? And
you cheating on these guys? Oh no!
We just started this.
When it comes to podcast, this is my second episode. But you know what? When it comes to podcasting, though, when I started podcast, I didn't even know what the hell a podcast was. My buddy was like, "Bro, you're hilarious. Start a podcast." I'm like, "That was a podcast. What does that mean?" You know what I mean? So I googled it and I was like, "Oh, I can do this." So my first like 5 episodes with my wife and I on the other podcast were literally done on my iPhone. And
gotta start somewhere.
Yeah. I probably started. I'm gonna go back to doing them on iPhone, but anyway, like it just like I say so many things that get me in so much trouble. It's ridiculous. I have people like already approach me about some things. They're like, "Look, we want to help you out or maybe sponsor some stuff, but you really got to clean it up." And I got to say no because I would love to say yes, I'm gonna do it, but then I see some something ridiculous, man. I mean, my mouth gets me in so much trouble. It's I don't know how my wife deals with it, but I mean, it's just, so what you're saying right now makes I felt it in my soul. That's all I'm saying, man. I agree so much with that. Yeah.
Thank you.
Yeah.
It's good to be heard,
man. Yeah. These guys,
we would rather just be real with people. We don't like rehearsing nothing at all.
Yeah,
Yeah,
I feel pretty similar.
Yeah, it's so much easier to just if I had a script in front of me, I would read it for 30 seconds and then it would mess everything else up because then their scripts wouldn't go with each other. You know what I mean? Like I might send you 5 questions I'm gonna ask you and then ask 12 questions and be completely against. So I just flow with what's going on, man. That's how I do things.
Be like water.
Yeah, Bruce Lee. There you go.
Words.
So I don't know if anyone's asked the question, but what makes Emacs go up? What drives the price?
That is a great question, and I will zoom out. What affects the price of any crypto asset or any asset ever in the context of a market?
I like this dude.
I'm pretty sure everyone's thinking it.
So I made a post tomorrow. I think it will be a month ago, or 4 weeks ago at least, right? And I kind of outlined some of the common fallacies that I see often in crypto, and I think they are also potentially some of the same logical fallacies and inconsistencies that people may have around traditional financial markets, right? But I think it's exacerbated by crypto because of the nature of it being kind of a new technology where even a lot of experienced and seasoned traditional investors don't really have much idea or guidance or baseline, right? I mean, even look at what Titan and Iron Finance, it's not Cardano. Who was Cuban? Mark Cuban. Okay. So if you rocket to a multi-billion-dollar setup, whether it's valuation or whether it's the amount of liquidity or market cap or whatever the language you're using, if that happens in a week or two, it should be a flag, right? Even if the flag is like, what if someone missed something? Nonetheless, so let's start with how are any assets priced anywhere, and I guess we can use shares. So let's say I've got a banana company and a strawberry company. Those that read this post will remember this. I got a banana company and strawberry company, right? So banana company farms and sells bananas, and strawberry company farms and sells strawberries. So then if you want to buy a share of banana company or strawberry company, you can do so because they're publicly traded companies. And these companies pretty much only make money by producing and selling this produce, right? So there are many factors in a traditional business that go into their reporting. And so a lot of times you hear a common milestone is the earnings call, right? Yeah. So these are kind of regulated things where the company has to come and say here's how many bananas we sold, right? But then they also get discretion. So Apple and Google, they tend to play these games a lot where some years Apple will tell you the number of each model of iPhone sold, or they'll give you specific details about product lines. And then sometimes they'll just be we have 300 million in iPhone sales and say nothing else, right? So there's a lot of things that you can speculate on and infer from what they are including or what they are omitting in those releases. But nonetheless, right, a company has really two things that are the most measurable, and it's income and assets, right? So it's revenue and assets. So banana company, they might have way more land or factories or whatever than strawberry company. So that might make them a much more valuable company from an assets perspective. But then strawberry company might sell way more strawberries, or maybe they sell luxury or strawberries, or I don't know, farm to table kind of. What is that called? Not bespoke. That one of those fruity words. Anyway, so boutique strawberries.
Boutique. There you go.
Yeah. It's gonna itch. So they might have much fewer assets, but much greater profit margin on their revenue, right? So even in the context where both companies have equal revenue, they both make, let's say, $100 million a year, right? of that, if Strawberry Company makes 50% margin, so of that 100 million in their sales, 50 million is profit, and Banana Company, they have so many problems and whatever, right? So they only make 20%. So, okay, here's an assortment of some of the things that go into the valuation of a business. But at a certain point, the company has authority to say, hey, I have one whole banana company. I'm going to divide it into shares. And so you can do that at the beginning in the early formation of your company. You could do it much later. There's a bunch of stuff that goes into that. But the simple version is they can determine how many shares exist, just like you can make up how many digits are in your cryptocurrency, right? So I don't actually think anything bars someone from forming an S Corp and saying that there are 1 quadrillion shares. I think it's an arbitrary number, if I remember correctly. Yeah. And I've been through this process multiple times, right, over the course of a decade. So whatever. So let's say, you got 1 million shares, and then you can do things like, hey, some of those shares can vote, or you can have classes of shares and what you can do with them. Obviously, that's more relevant in complex situations. But in the end, you've got shares and they represent a portion of that company, right? So I'm spacing on the term right now, but there's okay, so when you look at whether a company or not is overvalued, a lot of times you look at this. Yeah, you look at this ratio of earnings to the share price.
Price earnings ratio, PE.
Yeah. So exactly, right? So you look at that ratio and you can see, relative to historical performance, does this possibly indicate, because let's say they were trading 20x or something, right? So that means if I might butcher this, but if I understand properly, that means that the revenue that comes in, the number of shares divided by the revenue, or the revenue divided by the shares, you need to multiply that by 20 for it to be even. Or maybe?
I think that's right, yeah.
Kind of.
Sounds
if the
good.
company makes $100 million and there's 1 million shares and you have 1 share, you are entitled to $100 of that profit, because that profit goes into the company's bucket of value.
Yeah.
And in theory, the value of that share ups proportionally. But what happens is, as soon as you introduce a share price to an open market, now all kinds of things happen that is based off of the order book, right? And the order book a lot of times has to do with, in traditional finance, what's called the float, right? So you could have a bunch of shares that are not in circulation for all kinds of reasons. You got a new executive that comes in and their vesting period is only for they only get these shares at a certain time. And sometimes you can have shares that are, I forget what this is called, but they're locked by a company until a certain thing, or sometimes a time, and then they can go and say, then now we can sell these shares, kind of thing.
Yep.
And then companies can buy back some of their shares to change the float, but whatever, right? The float is analogous to crypto as the circulating supply, and the order book is based off of liquidity, right? So if I put a limit order in to sell Banana Company shares at $90, right? And it's trading at $80 right now. So that nothing's going to happen until the hypothetical point where Banana Company, now their shares are $100. So then on the way up there, as soon as it hits 90, as soon as there are open orders to buy at 90, now my limit order that's sitting there waiting for someone that's ready to buy at 90, then that triggers, right? And so the same thing works inversely in crypto. And so we'll just talk about Uniswap. The only way to value things is off of a price pair, right? Because you can, in theory, you can swap any assets, right? So this is where things start to diverge from traditional finance, because the easiest way of doing this in traditional finance is just you close out your position by liquidating, your share or your derivatives from one, and then you go and you purchase at the other, right? And if you're doing that on margin, which is credit, then that's you can do those kind of actions concurrently. So in crypto, like you have to have these assets sitting somewhere and ready to go to transact, to facilitate the transaction, because unless you're talking about like a traditional exchange, one that's like you got to sign up with your license and your tax statement and everything, unless they're regulated like that and they go through KYC, which is know your customer. So it's like anti-fraud laws basically that require identity management.
When you put up that little postcard next to your face.
Yeah. So unless you're going through one of those,
we don't have those in Mexico.
If you're just going through like a swap, so in particular like Uniswap, Sushi, Polka, Pancake, any of those guys, it is all on chain, and they're those providers are known as like automated market makers or AMMs. And so what happens is like when I go in and I wanna purchase some Emacs, for example, right? There must be Emacs sitting there for me to be able to get it, right? Because I'm not transacting with one person who has Emacs. I'm transacting with the market for Emacs.
Right.
Yeah.
Yes.
And so obviously Ethereum is the de facto standard when it comes to all of these ERC20 transactions. So usually everything is based on the Ethereum pair, right? Now, there are more elaborate setups that let you create, like, because in the context of the technology, with Uniswap or these, any other similar swap token, in theory, you could have a price pair for every combination, right? So there's like well over 5K coins listed on CoinMarketCap, for example, right? So you could do like basically like 5,000 squared, right? Because every single token you could have pair with something else. But that would be pretty inefficient. Because how many times do you need to swap directly from one token to another when you cannot simply use like the equivalent in the traditional finance of like selling your position, taking a currency and going and buying the new position, right? Yeah. So a lot of times when you see more elaborate pairs, there is much less utility. And so, as this expands, if we look at like the next decade of DeFi, you might imagine these types of swap relationships would be really important, because what if Banana Company and Strawberry Company both want to sell, they both want to run grocery stores, right? And they don't want to just have bananas or strawberries. They want to have both, and they want to have all kinds of other fruits, and stuff, yeah. Right? So instead of needing to transact with money, instead of needing to buy and sell each other's stuff and incur like whether it's processing fees or just the human effort of doing so, or like you have what's called like impermanent loss or counterparty risk or all of these different things, you could then swap and say, hey, I will trade, this equivalent of banana for this equivalent of strawberry, and then just drop ship it kind of thing, or like just bring it to my grocery store.
Basically bartering.
Yeah.
So yeah, I mean, it's like, that's kind of what these pairs are. It's next gen bartering, but it could all be automated, right? So once again, though, to dive really specifically, if no one wants to trade bananas for strawberries, there is no liquidity in that pair, right? So then you can never transact. So even if I say I will trade 1 billion strawberries for 1 banana, if there is not a single person that has an open order there, or in the context of crypto, if there is no liquidity to satisfy that on parts of the pair, then you just can't do it, right? Because like either buying or selling, so I'll still use Emacs. If I want to go and buy Emacs and I have Ethereum, right, then I'm going to go and I'm going to say, here's my order, and then automatically it will accept my Emacs, or it will accept my Ethereum, and it will return me Emacs. And so the Ethereum I am purchasing with goes into the Ethereum side of the price pair into the liquidity pool, and out from the Emacs side of the price pair it goes to my wallet, and it exits that side of the liquidity pool, right? So what Uniswap does to facilitate this is they have a bunch of elaborate math that like I've I did some reading on. I was like, this is not helping me. But they basically allow what are called liquidity providers to charge a nominal fee or to set their fees for allowing this pair for providing the liquidity there, right? Because what happens is you're going to go and you're basically going to deposit your liquidity. You're going to say, and you got to do it proportionally. So, if I want to go and let's say for round numbers, I'm working with a token that is $1 and Ethereum is at $1,000, right? So I got to, for every Ethereum that I want to put into this liquidity pair, then I also have to add 1,000 generic token, right? And that's why otherwise it would have repercussions on the price pair, right? So if there are more buys than sells, or if the value of those buys rather than the sells, then if you're buying from Ethereum, the Ethereum side of the pool goes up, right? And the amount of available generic token or Emacs or whatever asset goes down. And that relativity is the equation that determines price.
See, this is crazy.
There you go.
Sorry.
That's beautiful, man. Like, I have to keep my mouth shut because my mind, I grew up doing a lot of bad stuff I'm not going to get into, right? So, like, I start thinking one way and it starts moving and I'm like, oh, he means this and this and that, here, kilogram of this. And I'm like, so I'm just trying to, I'm just keep my mouth shut. But,
kilogram.
It's crazy how much that made sense to me.
Does it look like, I feel like I'm blushing for you.
I get that all the time, bro. Don't worry about it, man. But
fair enough.
But you slayed that. That was pretty dope. But it made so much sense to me. And like, if I had like a 12-year-old that was on the corner, I could explain to him perfectly everything you said. He didn't know. That was good, man. Oh man. Oh yeah. Forgive me.
I guess I'll try to compress that into a soundbite. It's like, if there are more buys than sells, it goes up. If there are more sells than buys, it goes down. And in the context of crypto, many other things can happen that result in this action, and your conclusions will almost certainly be speculative, right? Because very, very infrequently will you be able to guess or look at all of the things that have made something happen. And in any microcap, like, on traditional side, that's like penny stocks, right?
Yeah.
It's the same kind of thing, because you got to recognize if there's a million or a couple million and not billions and billions, you can come in there with a million and you can double or you can halve the price, right? And so what we see in crypto as a whole is that, like, we still represent fewer than 2 trillion. I think with the current price, I think
1.7.
we're like
1.7. I think.
What 1.7 right now?
I think so. Yeah.
Yeah, and
only Broski would know that off the top of his head.
I watched the video last night. Sorry.
Yeah. So, like, in to put in context, right? The DTCC processes something on the order of like 4 quadrillion per year in volume, right?
Man.
DTCC being the Depository Trust and Clearing Corporation, which is a private black box company that makes all the rules for all stock markets and probably puts a lot of people in the SEC. But we're not gonna go into that right now. Gary Gensler is a newly appointed SEC chief. Yep. And I took his Introduction to Blockchain course online. It's on YouTube for free. And it was taught at I think MIT. So, like, I could not be happier to have somebody like that in a position like that, the SEC. So I think that bodes really, really well for the future of crypto and DeFi. Because 100%, like, a lot of things are going to blow up and collapse when this correction occurs.
Yep.
And to call back to that question from earlier, will we see a wealth transfer? Absolutely, we should, right? Because a lot of that wealth is accumulated in completely illiquid and useless ways that benefit nobody. And why not build something with that, right?
Right.
So,
I agree with that.
Yeah,
Yep, I stay getting paid, man. That's all I think about is just money. So yeah, I'm with that all day. Like, everything comes down to me because my wife was asking me the other day, right? And she's like, how does someone decide that Bitcoin worth, $30,000. And I'm like, well, in the easiest way I can explain it is supply and demand. This guy has this many. He goes, I'm not going to sell mine unless you give me this much. And somebody has decided he wants it that much enough, and then he goes in and he buys it. You know what I mean? But like, when it comes down to it, man, like the volatility is still. I've been trading for a very little amount of time, even though I've been successful. My finger trick, bro, it works. It's beautiful. You just long. You know what I'm saying? Like it works.
50 a good odds, eh?
Yeah.
There was some article, right, where it was like they had like some dog just pick random stocks and it outperformed like I think it was like 70 or 80% of like all hedge funds and mutual funds.
Wow.
Holy shit.
The more I learn, the worse I am at trading. I swear to God. It's like I'm over here charting now, and I know all this thing, and I can see patterns. When I was like, green, go long, but 12%. That worked so much better. But it's like, it's maybe it's just me. I don't know. But like, it's crazy how that works.
You're thinking too much. You're thinking too much.
It's called analysis paralysis.
Yes.
Right.
Yes.
So at a certain point, increased signal and data allows you nothing as far as a benefit in decision making.
All you see is risk now. That's all you see.
Yeah. That's my whole life, bro. You just define my whole life in one sentence. But yeah, man. Now I got another question as far as Emacs goes. Is what I asked earlier, like what does the future hold for Emacs as far as like just not? I mean, in the relatively like near future, like in let's say the next 3 to 6 months. I mean, speculate. I know you're just your opinion or your guess or whatnot. I'm very curious to know what you think about that, man.
I am afraid I have no comment.
I can't blame you for that.
We can talk about, what interesting things could happen with crypto projects in the future.
That is.
But I would encourage anybody that's interested about learning more. The Discord has been the most effective repository for information on this project, right? So like they've got all of the socials. Discord is the preference, right? So if you want to go in there and have a conversation.
It's a dumpster fire right now, though.
Yeah, the reason why I asked about it is because like I feel that like Emacs has been out there, but so many people still don't know about it. You know what I mean? Like from what I've seen, like even though the fight's
relatively new, it's definitely new.
But I've asked I'm in a server that I asked somebody about it a couple days ago. And the guy was like, and this is like a couple days ago. He was like, "What's Emacs?" And I was like, "Yeah, is he lying to me?" You know what I mean? But like just. So that's why I asked about that. But just in general, what do you see in the crypto market as a whole then in the next few months?
Yeah. So zooming out, right? In Emacs's context in particular, I think there is more visibility on Emacs than any token of similar age ever, right? Even Ethereum and Bitcoin itself. Like, trust me, I know, right? Like, I'd be the guy back in 2011, 2012. Like, dude, everything needs to be decentralized. Like, what if this becomes the next generation of finance? And sometimes you're too early, right? Maybe not so much because those old wallets are kind of nice to stumble upon.
Man, I've been doing all my banking at the liquor store for years.
Yeah, so that's fun, but at the same time, it does something to your brain to like watch something unfold that you were so early on that it was actually more off-putting than it was encouraging, right? So with regard to Emacs, I think they have the opposite issue, which is that they have massive, enormous reach and positioning and prominence. And then it's like, okay, what do we do with this, right?
Yeah.
Now we have an ability to speak with anybody. And like, what do we start with? So I'm going to approach the rest of this piece outside looking in the same way that I would describe or analyze any other crypto project. And, there's no internal insider information here. I'm just going to say some of the same things I've been saying since the beginning of my involvement, right? Mm-hmm. Which is the same way I would support any value-based position I would take in a project, right? If I'm going to be invested in something, I'm going to have some hypotheses, and I'm gonna have some reasoning behind it. So my reasoning is like, hey, I think this is a worthy investment. It means I think it's gonna go up. It's said there by nature of being involved in a project, right? So with that in mind, that positioning has a ton of value for a bunch of much more deeply technical and deeply utilizable. Some tokens with a lot of utility, right?
Yeah.
Would absolutely benefit from increased prominence, positioning, and publicity, right? So now I think that the strategies that unfold for Emacs and any similar token, where it has attracted a lot of attention and is searching for purpose and direction, the right thing to do is to connect with any other project or token that reaches out that has clearly expressed, hey, we have an interest in doing this technology for these reasons, and with more people and more eyes and more attention, we would be more successful. And I think in that regard, Emacs is totally positioned to be like a gateway, right? And you also look at from the position of, like, let's say, a project has developed some really, really, like, they built a side chain and their transaction times are quick. There's no gas cost. They have all these things that they've invested years into building, right? And now they're like, hey, we need distribution for this massively scalable technology. What better way to do that than take a token that is just getting its foot in the door, representing virtual tickets or digital purchases of tickets for some high-level sporting events, and say, let's go match up with another, large enterprise that does all kinds of events and promotion, and then we can go and contest Ticketmaster, right? I mean, it's totally people to expect those things, but those conversations do not occur overnight. They are long, they are extended. Sometimes they are aggressive. Sometimes they are confusing. I've been in many of them, so
it must be very exciting to be in those conversations, though.
Yeah,
exciting sometimes, and then then as soon as you look at a chart, or as soon as you look at a stream of chat, it's like there is no way that signal cannot be useful to me right now in making some of these decisions.
No,
right?
It's not.
You know what I mean?
It's all chatter.
So, like if you try. The irony of decentralized projects is so often they suffer from decision paralysis, right? Where, hey, we want to make sure that everybody has an equal voice and an equal decision. But, if you've got 10 people together and one of the 10 is a domain expert, and then the decision that everyone has to have equal vote is a domain-specific decision, right? So a particular thing, legal, financial, marketing, PR, like interpersonal, technical, like the list goes on, right? And then you can subdivide each of those. So now you have a controversial scenario where many people are being asked to give a weight that has equal, or give a vote that has equal weight to a thing that they are not deeply familiar with. And so now the politics, as it were, requires, like, whoever the domain expert is to now, like, negotiate and politicize their knowledge of a thing and translate it effectively to these other decision makers. And so frequently in the context of a decentralized organization, this prevents things from happening, right? And so the successes that I've watched in semi-decentralized organizations employ some type of weighted governance, where it's like, hey, here are things that I have basically no opinion on because I am not qualified to have opinions on.
Right. Yes,
right?
that's how it should be.
And so that requires a fair amount of self-regulation, right? That means that, like, people have to be honest about which decisions they believe themselves to be effective in.
And that's
a really challenging thing to do.
Yeah, it's crazy. Like just in general, like people will say stuff they know or comment on stuff. How many on Facebook? You see it all the time. Someone starts commenting some stuff that they maybe heard their auntie's cousin talk about. You know what I mean? That no one knows anything about, and they're so sure in what they're saying. It's I don't know what you would call those people, but I see it all the time. We got a buddy who's always posting stuff like that. But it's like if I don't know something about something, I'll ask, because I'm not one to make a fool of myself. I'm not just like, oh yeah, blah 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 blah, derp, derp. And it's like I have no idea. But there's people who they don't even care, man. Like it blows my mind. But emotions and ego get in the way of so many things. It's like
Yes.
that's crazy to me.
Yeah, and I mean, so frequently too. Like, if you're in any of these scenarios, a lot of the time, you could take a deep breath, be an observer to your own thoughts, and you could watch as like, hey, the way that you're doing things is not so dissimilar from the way other people are doing things.
Right, perception is everything.
Yeah, so I think there's a fair amount of there's a massive amount of value in always trying to approach any decision or any conclusion with a fair amount of like self-skepticism, right? Where even if instinctually it's like, this is what we got to do, I'm 100%, then it's like, I don't ever go above 80% until I have that rest filled by people that I respect.
Yeah. I respect that.
Because it's just suboptimal to be that hyper aggressive. That doesn't mean that like I'm not 80% often, but it certainly means that like I'm never gonna steamroll people until they help me fill in that gradient, because there will always be things that everyone misses, and sometimes that's a result of the spontaneity of a decision. Sometimes it has to do with like
overthinking,
physiological factors. So sometimes you're more prone than others to like think more narrowly and to loop in things, and sometimes you're way too divergent, right? And you're thinking about too many things, and you need somebody to help you get channeled and focused. It just needs to be an iterative process. I think it's really important for everybody to practice.
All right, we're going on an hour. I got one more question. Art, you can go first.
No. I was gonna say something retarded, so just go ahead and
I just didn't want to take too much of your time, Josh. But I just had a question about the future of crypto with regulation and the SEC coming in. Where do you think that's going to take us? Because honestly, I can go online right now and I can create a token, and I can add liquidity to it, and I can sell it to people, and it doesn't cost me much, and it doesn't take a lot of time. And that's a lot of scams are coming out of that. There's been tons of scams probably in the past month where it's just pump and dumps over and over again. I think regulation is needed. What is your take on it, and where do you think regulation is going to take us?
And how much is Bitcoin going to be worth next week?
Nothing. Zero.
That's what my chart's telling me.
Yeah. Regulation, I think, is probably the singular most important thing for the effective growth of DeFi as a whole. Regulation is not the enemy, right?
Yes.
Regulation is what allows you some standards and some guardrails to go and build a thing and see if it works without accidentally destroying people's lives.
Right.
So zooming into like the current state of affairs and my short-term speculative projections, I think NFTs are regulated as securities before cryptos themselves, before cryptocurrencies.
Oh, wow.
And I believe this because I've done a fair amount of detailed reading. And if you Google like, are NFTs securities, for example, right? Or like even probably, you could probably get there by Googling like, how are NFTs taxed?
NFTs blow my mind, man. They blow my mind.
Yeah. Well, so okay, let's non-fungible. What does non-fungible mean as compared to a fungible asset? It is the ease at which it is transacted,
digital,
or how it is represented. So like, as it stands, what people are saying in NFT is it's just a hash, a digital hash, which you control the private key to.
Right.
So, you can, for example, you can upload your Twitter post. Sometimes I've heard those called tweets. You can upload your tweet as an NFT.
You just taught me that. I had no idea.
So you can upload your tweet as an NFT, but you can also screenshot someone else's tweet and upload that as an NFT. And
right.
How are you determining authenticity and ownership? Right. So it's like the utility is just not there because, in my opinion, the future of NFTs is much less transactional and much to do with how we fix just the abhorrent, broken patent and IP system that we have in in modern civilization. It's just extraordinarily terrible in every regard, in software and in manufacturing, in healthcare, in publishing, in music production. Terrible everywhere, right? So if we could find a way of establishing a digital chain of custody for how things happen, that makes NFTs viable. And in the short term, I think they are dangerous to consider, right? Because you have to now, if you do that Googling, you'll see there's some, I forget the name of there's some test, right? And it's like every top law firm on the first page of that search references this same test. And so it's like, someone like Dunning-Kruger, like it's like some name that's something test. And so everyone that's like, gone through this knows that test. And it's like, this is the most recent or relevant precedent, which has been established by, I think now like this, I think it was like, it went all the way up to the Supreme Court, but whatever, it's precedent, right? And it says there's like 3 factors on whether something will be considered a security or not. Right? Because it's like, hey, if I don't go through and do all the paperwork to list my company publicly, and I don't say I'm selling shares, but I'm like, hey, I've got 10,000 gumballs, and for every gumball that you have that you don't eat, you have, 1/10,000 to this company. The SEC can come in and be like, that's a share. You're committing securities fraud by not going through these forms, right? So that's a security. And I might be able to remember the 3 criteria. I know one of the, let's see if I can do it. I know one of the 3 is, did you market it as an appreciable investment, right? I think another one of the 3 is it easy? Is it liquid, right? Because like art is obviously not a security, but also because like art of certain prices is not super easy to just instantly sell, right? So I'm pretty sure those are 2 of the 3, and I don't remember the 3rd, honestly. But yeah, I mean, you can go and Google that, right? So nonetheless, they're like that precedent and those statements by well-renowned and well-regarded legal bodies are contrasted by there are not those statements about cryptocurrency, right? However, if you dissect Ripple, right? If you dissect Ripple and you get into, you go just like digging straight to the source by going and looking at the solidity code of a smart contract, or just like digging through, getting to all of the DTCC rule filings, you can always go straight to the heart of the data. And so in that lawsuit, you can go and you can read like court filings and documents, and you can read transcripts, and some of it I think is redacted, but a lot of it's just there. And you go and you look into that, and you can find that like one of the bigger issues in that case and in that context is that they were using what could be, or like what is considered I think, I don't know if it's even been established yet, but is considered shareholder money to fund their other projects and to gift themselves things, right? And so the difference here is in fact the preface of, did you do this as a like a fair launch or the closest equivalent to it, or did you offer it as an ICO, right? Because if you did it as an ICO, you are simply declaring that these tokens or these coins are equivalent to shares, right? So you are establishing yourself that this is a security, or it's like a securitized asset, I think is what it's referred
asset
to.
As well.
Right? Yeah. So if you do that, and then you take some of that and you go and you spend it on whatever, and because that's like shareholder investments, you're supposed to disclose that. You're supposed to go and have like board approval and whatever the constructs and requirements are. You don't do that, that's a problem, right? But I go and I just write a smart contract. I go clone something. I whip it up there in 15 minutes. I pay and I fund the initial liquidity on Uniswap, and then like I hold back 90% for myself, and I only put 10% there. And someone comes and they buy it. As it stands right now, they just gave me that money if I want to sell, right? And it is challenging. It is challenging to even consider how a precedent would be set given the innumerable potential trade-offs. And in the context of legal precedent, right? Like some of these things, like they're going to have they get cited 20, 30 years down the road, right? So it is a real question where the line is going to be drawn in the context of cryptocurrencies. So you can tell, like, hey, if there's an organizational affiliation and they are promoting themselves as a security, well, then you can know it's important to do due diligence on that company because you are truly investing into a traditional company, an organization. They're simply using a new technology to unlock that mechanism of investing, right? And if you're doing it with a project where, say, for example, everybody's anonymous, but they have like renounced ownership of the original contract and they don't hold, some scary percentage of all circulation, then it's like, do that at your own risk, but recognize where are you placing your trust, right? Are you placing your trust in yourself and your ability to speculate on whether other people will eventually find this token interesting or not? Are you speculating on, potential outcomes of teams that are spending time, that are talented, and their ability to make something that's useful? Like, you gotta place your trust in somewhere, right? And so, like, more volatile things, mean that you can have more random potential reward, but it also means you accept that downside and you should play at your own risk.
More risk.
Yeah.
Yep.
If I loan people money, I expect to not get it back. So, yep.
Yeah. And it's, we could go on in this direction, but like regulation's important. Do it at your own risk, anything in crypto, and like try and take some time and do some due diligence if you are truly interested in a longer term play. Otherwise you're gambling, and there's nothing wrong with that. But like, let's not all go and attack people and send hate mail and death threats because you lost your gambling money.
Yeah,
right?
yeah, exactly. You made the mistake.
Yep. That's exactly what it is.
You can't get mad at Marlboro when you die from smoking cigarettes. You know what I'm saying?
Nah.
Everyone Sandy, you said you had one more question?
One last question. So Kimmy K has put a post up on her Instagram about this. Are you guys, have you got any other publicity movements that you're trying to get some high rollers, I suppose, or some people in those kind of positions? Are you working on anything to try and get more posts out, to try and basically just trying to get the word out about this? Because
pay to win, right, Josh?
Like you said before, not a lot of people know about it. So how are you anticipating to get this out?
Like I said, I contest that, right? I think far more people know about us far earlier than any other project. And
I agree.
There's a significant amount of influence in how we go about doing things, because it's simultaneously our greatest lever. It is a way to now go and interact with anybody that we choose, right? Mm-hmm. And it is both that, and it is a huge burden and liability, because there is so much more scrutiny on things that any other project would have already solved behind closed doors, right? Yeah. So that is the irony of that positioning, which is another dimension of volatility, right? So we have multiple dimensions of volatility here, which are equal, it is equilibrium between. That could be massive payoff, or it could implode. But that's the nature of volatility itself, right? And so I'm in this position, and I'm invested in the project because I believe in the upswing, right? Mm-hmm. But that is my statement, not a financial advisor. You might have guessed that already.
Not a financial advisor. None of us.
I always say that we're not financial advisors, but we like to advise people on their finances. You know what I mean?
We run a trading group. We help people. We mentor them, but we don't give out financial advice.
Right, because at the end of the day, it's your decision. You know what I mean? Like if I tell you to go bet on the Lakers, you know what I mean? Like, that's just my advice. I don't have no inside information on nothing. Like, so you can't get mad at me when you lose. You shouldn't listen to me. That's your fault, bro.
We've got lots of disclaimers.
Yeah,
Fair enough.
it's so necessary. I mean, my life is a disclaimer, but yeah, it's just in general. It's just I've asked everything I want to know, man. I mean, I have a lot of questions, man. It's been an hour. I don't like people, just
Yeah, we'll have to have you back. I don't want to take
definitely, man. I mean, tomorrow. Let's do it again tomorrow. No, I'm saying, but like, just realistically, I'm very like impatient, man. I can't an hour. I'm blown away. Me and my wife do a show in 45 minutes, an hour, and I'm like, okay, it's time. So it went by pretty fast. I thought it was cool, man, all around. But
great experience,
some great information too, man. But yeah, we definitely have to have you back. I don't know if there's anything else you want to add to it, or also when you get off the thing, get with Broski so that if you got any links you want us to put on the description or anything you want, or any information, anything at all, just let us know. But I thought it was cool. I thought it went really well, man. I mean, it is live. I don't know how many people saw us. Whoever didn't, it's your bad. You guys are gonna lose money now because you don't watch us.
We'll be sharing it everywhere.
Yeah, definitely.
Really
man.
appreciate you having me on here for sure. It was a lot of fun.
We really appreciate it, man.
I just been constructing all of this this new setup so the internet can see more of me.
Right.
Back to the internet.
Yeah,
I believe it's time.
That's
the
cool,
beacons
that's
have been lit.
Gotta come back, show your face, come out and blush for everybody else, right?
Right.
For sure.
Yeah, man. Appreciate it, man. It was really cool. Thanks for your time, man. And we definitely have to have you back. Hopefully sooner than later, man. And keep us updated if you can. Appreciate it.
Will do.
Thank
See
you,
you, everybody.
Take
care.
Take care,
All right.
Take care, buddy.
Bye.
That was dope. I'm gonna end the broadcast real quick.